So in our previous lectures from this section, we've spoken about Forex terminologies. We learned about terminologies like the lot size, learned about pips, we learned about the ask price, the bid price, and the spot price. So in this video, we're going to be learning about another terminology, which is known as the pip value. Okay, so we're going to learn how to calculate the pip value and how to calculate the profit we make from our trades. Okay, so what's the term pip value? What does it stand for? So the pip value is what enables a trader ascertain the amount of money they make or they lose for each pip movement if a trade goes in their favor or against them respectively. Okay, so the pip value depends on the lots used. Okay, remember we have spoken about lots or lot size, and this pip value we are talking about now depends solely on the lot size the trader uses. Okay, so the pip value is always in the quote currency. It's always in the quote currency, and there's a formula for calculating the pip value, which is lots times 10. Yeah, so it's lots times 10. We're going to look at an example later on, and we're going to learn how to calculate the pip value. Okay, we're going to learn how to calculate the pip value and how to calculate the profit we make from a trade, even if it moves more than one pip. Remember, the pip value is the value of one pip movement. So what if the price moves more than one pip? We're also going to be learning how to calculate the value. Okay, so the actual profit made depends on the lots used and the pips gained. So there's a formula also for actual profit, which is the pip value times the pips gained. Okay, so that's these are things you should have in mind before we move to the next slide. I'm just gonna move to the next slide. Now the next slide is an example. This is an example using Euro USD. Okay, so we are assuming that the current price for Euro USD is 1.30000, and then the price moves from 1.30000 to 1.30010, which means it moves one pip. Okay, so there's a one pip movement in Euro USD, and we trade one lot. So our trade is one lot. Now the contract value for one lot will be equals to 100,000 of the base currency, which is euro in this example. Remember, it's Euro USD, and lot is a standard lot is 100,000 of the base currency. So it's going to be 100,000 of euro. Okay, so now the contract value will be 100,000 multiplied by the price, the current price. Now that will be 130,000 USD. So we're going to need 130,000 USD to be able to fund this contract. Okay, so if the price moves to 1.30010, which is a one pip movement, then the contract value will be 100,000 times 1.30010. Okay, so for the one pip movement, we now have to find the contract sum for that one pip movement. We have to now multiply 100,000 euros by the new price. Okay, the new price after the one pip movement, which is 1.30010. Now that's equal to $130,010. Now the pip value for the price move will be $130,010 minus $130,000, which is equal to $10. So the pip value for this price move is $10. $10. I remember I said the pip value from the previous slide that the pip value is always in the quote currency. Now the quote currency for Euro USD is USD. So the pip value is, in this case, is $10. So for one pip movement, the value is $10. Okay, so let's go to this last point, which is now that the actual profit made from the total move will be pip value times pips gained. Yeah, and the pips value is lots times 10 times the pips gained. Now this is the pip value, which is 10, and of course it's one pip movement, so it's $10. Now, what if we made more than 1 pip? What if we made, let's say, 35 pips? So if we made 35 pips, the value for the movement of 35 pips will be equal to 10 multiplied by 35. So it means we'll have made $350. We'll have made $350 for a 35 pip movement of a Euro USD trade placed with 1 standard lot. So that's as simple as that. Now you understand what we mean by pip value. You can calculate the value of a pip. You can calculate the value or the actual profit you've made for whatever amount of profits or of pips rather, of pips movement your trade makes. So in the next video, we'll be learning about more terminology. We'll be learning about the leverage terminology. Okay? So hope to see you in the next.